Hello, 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 everyone. Good morning. Sorry, running behind today. Computer just keeps locking up solid. Been dealing with it for the last 2.5 hours. Hopefully, we'll make it through the live stream. Hey, hey, waka waka. Well, it's a bad day for technology for me. It's interesting. Again, I'm still catching up on stuff. So I did see German CPI was higher, markets pulling back. Again, when it can't sustain a rally at this point, we didn't even trigger that daily buys, and that's why it was more aggressively raised up the stops. Whew. When it can't even sustain anything, so far this falls in a sideways correction move, by the way. Good morning, George. Good morning, Patrick. Thank you for posting the numbers as US GDP coming in right where estimated. The other stuff, Waka Waka's putting it in here. We got personal consumption. Let's jump over here. Core PCE prices coming in higher than forecast. So, I mean, this is backwards looking. So that's already the chatter. Oh, it's backwards looking. Well, we already know it's backwards looking, but when it's that much higher, it's still in there. The GDP price index higher than forecast. Initial jobless claims coming in better. So that's one of the key things because and continuing jobless claims coming in better because you know how much the Fed is focused on employment. So employment still remaining strong. And they have two mandates. People don't seem to remember this. They have employment, which I think is a stupid mandate, and price stability, which we already know they blew. But now they're still focused on employment because if they're going to focus on price stability and employment stays strong, they can be more aggressive with their hiking. Let's see, that's about it. Real consumer spending coming in a bit stronger than previous. And then we have tons of Fed speak the rest of today. The market map is back to red. FOMC 75, Fed Watch 75, 61% for the 75 basis points, still in negative gamma. Fear and greed back to 18%. Still watching for that more substantial bottom. Bed Bath and Beyond, we just have constant morons out there. Huge miss on earnings, but they said they'd be cash flow neutral by the end of second quarter. So it's obviously buy it. By the way, Micron and Nike after the close, until this meme stock junk is wiped out, it's just we're not at the bottom. Let's see. Good morning, Davey. Stagflation. Well, let's see if the markets will make it out of this bullish or not. Again, I can just follow the price action. Good morning, options 22. I've seen this market eat bad data since mid-June. Only Lehman Brothers event can tank it now. Well, there'll be something. We don't have stability in this. It's going to get interesting still with the pound situation. It's going to get very interesting. Morning on something. There's going to be some event that triggers the cascade. There's just too much instability right now. I don't know what that event will be. Nobody does. It's going to come out of nowhere. Good morning, Josh. Hey, MJ. Good morning, Rams of Fall. Hey, Chris. Hey, Sterling. No, he's not even trading Waka Waka. It doesn't matter. Because if he was actually doing something, he'd already be licking his wounds. Let's see. Inverse head and shoulders on the... We'll take a look at the dollar index. There we go. Hey, Christoph. How's everything over in Europe? It's Germany specifically. How's everything going over there? Hey, Raj. All right, let's get right to it. So, So far, inside day from yesterday's little bull run. First and second targets hit on the shake and bake, but pulling back. The key level to watch for is this 36.64. 36.64, already the pullback into the rotation zone. I'm watching for about 37.15, 37. I'm bumping that up a little, but 37.15 for a rotation back up, and that's my bullish play. The rotation back up above 37.15 only, and then that would be a retest of yesterday's high areas. So that's where it sits, but close, at least a 1 hour close back below 36.64 takes me back into watching for a retest of the lows. Why? The probabilities then favor a retest of 36.30 to 36.13, which then would, again, now we'd be trapping all the people who bought the breakout the other way. So far, bigger pullback. This is not strong after triggering some buy signals yesterday. So that's what I'm watching for. Remember, we had daily cycles at the bottom, nearly hitting the rotation zone, but I'm going to be paying very close attention once these cycles get to the top and start tipping over again, because then with weekly barely making it out of the cellar, not even making it out of the cellar, we could see another substantial push lower. If this resets the daily and it can't get the weeklies out of the cellar, then I'm really preparing for another push down, which we have not had any capitulation move. We have not had anything short term. There is a strong, remember, what are our two kinds of corrections? All right. We have a return, a really bounce, like this is a corrective bounce up, this one back in here. So far, if you zoom out, yeah. If you look at the real micro, I don't know why this keeps locking up. If you look at the real micro, it's a little bounce back, but if you start looking at the more macro perspective, this is a sideways correction. Start looking at this, it's not really a return. This would be a bounce play. This so far is sideways. The only thing that gets me into the bigger bounce play at this point, given this weakness, besides those little levels I talked about off the open, would be taking out yesterday's high. Then we'd probably be in the pullback correction with the target. Then the next target would be this 38.15 area. So that's on the S&P. The NASDAQ, again, inside day. Key areas on the NASDAQ. For my resumptive area, it's about 11,500. Not looking to get into more bullish mode until above 11,500. Key line in the sand, 11,318.50 on a closing basis. We'll see if we can get to that at the end. I want to get through these markets. That would just be a minor 15. Do you think the rally is heating up going into October? I'm not. This, if it was a bounce play, is way too early for an October play just yet. Remember, October tends to favor mid to end, and we still have a lot of stuff coming out before then. And as I said, once we don't have a daily buy yet. What if we do get the daily buy, which we don't have? Everything would be, I'd be just in a longer term trailing position. Why would I be in a trailing position? Because things can turn into a more substantial rally. We just don't have it yet. Dow, though my breakdown will be a little early. I'm watching 29,385 area. And then the key level is this 29,250 area. If we close below there, then watching for the bigger pullback right there. Again, the bullish area is 29,650. Russell, key line in the sand, 1679. For the downside, for the upside is 1710. DAX coming in, forming now. We have on the 4 hour potential. I'm using the aggressive targets because we don't know at this point if the right side of the potential double is in place. Remember, potential. Once we know the right side's in place because it's counter trend, I am shifting to the conservative targets if they're higher than the left side. Keep that in mind. All right. And before that, we do have a gap fill play, but nothing in the short term just yet. Retesting a key harmonic area. I'm now going to, remember we were on the reverse harmonics. We have a pausing bar. I'm going to think this is a pausing bar unless we take out yesterday's lows. So that gives us the longer harmonic right now, which is what I'm still going with, because this is the better harmonic anchor point than this one. You can use this one if you're really trying to fine tune something on a shorter level, but I would stick with this one for the time being. 11,564 to 11,617 is your major areas. Back down. Notes. Trying to do a little pullback here. See here, where do we watch? That's why I have also the harmonics anchored. We already have the pullback to the 50 to 62.5. So this looks like we're going to get a possible bullish move, and then I will be watching for this 112.20 area on a retest. We actually get up there, we could have a potential little mini double top. But this is the first counter move between the 50 and the 62.5. Longer term, am I super bullish yet? No, we need a more substantial bottoming pattern. This is just a quick little rotation play up, and also you see the 50 on the 4-hour, and this already returned to the daily rotation zone. So this would just be, I would not recommend anything longer term just yet. This would be a scalpy play to the upside. Stops have to be around 111.15 on a closing basis just below there. It's okay, Gary. You get a pass today for being late. You know where I stand with my next targets, Rich. We don't need to. That's the longer term. We could have a substantial bounce play before then if we get a flush out move. I actually think fair value is much lower than that, Sterling. We have yet to see earnings compression. Yet to see earnings compression. It's going to get very interesting. So that's key on the notes. Dollar index. So far, yes, even with this big pullback and the outside day yesterday, this is still based off the amount of this move is still a sideways correction with the rotation zone catching up. So far, this is a potential double bottom. If we push much lower on this right-hand side, though, if we push much lower than 112.71, it will be off the table. Why? Because you see, if I extend this down more, the second target, I'm just using this as showing if it pushes down more. That's not an anchor point. Then that would be invalid. But so far, it is a viable play above 113.72, 114.22, 114.48. And then the final target, which into the wicks is slightly lower probability, but really nails out the high. If we start breaking though down below this low, it's off the table. Also remember, if we start really breaking though into this clear path move, you could see the bigger pullback. So I am being patient on the dollar index. What else do we have? We had something earlier on the dollar index. Where was that? Oh, geez. Everybody's talking about TomTom, and I can't find I know we had something on the dollar index. So put it back. I can't find it right now. Oil had a nice bounce. Will it hold? Well, that's a good transition. We'll take a look at oil, then we'll... Oil has already hit the double targets. Even if you tried to go off the more aggressive, they're hit. So Can it sustain a little key more move? I am watching for a rollover play unless we get a really strong push above about 84.40. Then the next target would be 86.53, and that would just be for a short-term play. We're already retesting this breakdown zone. But cycles can still get to the top, so there might be a little less. From my perspective, risk to reward is challenging unless you're playing it on a really short-term basis. But those would be if I was playing it on a short-term basis, the next target for raising a stop would be 84.40, and this bigger breakdown zone would be the next area. And also you see that's a return. You can see on the weekly, that's this major breakdown zone with the declining weekly rotation zone. Trying to get weekly cycles back up. So back up in here, I'd be watching for the more substantial rollover play again. We can take a look at some other stuff after. Actually interesting with the yen so far. Break back. I'm not talking about this high. I'm talking about the candle bodies. Break above, retesting support with the rising daily rotation zone. So this could get interesting to see if I'm expecting this to take out this 145 area and then retest the highs of the intervention. And let's see if they the Bank of Japan steps in again. Remember, we had that double trigger on the euro. There is a potential double top. This is not turning into a triple yet, even on the 1 hour. This is still valid. So we already have the double bottom triggered. The only thing that would invalidate this then is the double top triggering, which is the close below 96,358. Other than that, still expecting some higher prices because the double has triggered in the euro. Again, this is a counter trend move against the daily rotation zone, so it is lower probability, and I would focus on this 98.20 as a key target unless the double top does trigger and wipes that out. Pound, just keep an eye on the pound now because I'm expecting another rollover play at some point, but we should see a continued little bounce. There is some clear path to the upside. VIX, again, we're up in pre-market, but I'll get substantially more bullish if we take out yesterday's lows. Other than that, it's choppy. 30 is the key line in the sand. We start running back up above 32.50. That will tip me back into much more bearish mode, especially if we break down below those 62.5 key levels. So that's going into this morning what I am looking for. Tesla looks like a gap down, so I mean the only thing is if there's stability in the open, the gap fill below 277.75 is a retest of 271.75. Below that, retest of the 265 lows, and that's just not for today. Besides the gap fill, cannot really do a more bullish play until above about 292 besides any gap fill play. Spiders in the Qs. Spiders, besides, again, if we get, I normally watch the S&P. If we get anything bullish, we'll be doing the short-term gap play. However, do not ignore yesterday's open as a first target. Yesterday's open will be a key first target before a gap fill. Yesterday's open 369.27. Sorry, that's the 4-hour open, not yesterday's open. The 4-hour open from yesterday's. Do not ignore that before the full gap fill. Okay. Key line in the sand for the spiders, 365.16. That's where you'll be watching for a closing basis. Why? And that would be at least I prefer a 1 hour close. Why? That would take it below the 62.5, which then would favor a retest of the lows. And the full gap fill to yesterday's close would be back to 370.53. But the same analysis pretty much stands that I did on the S&P. Your key levels for the Qs. Key line to sand 275.48 is key support. We are pre-market into the 50 to 62.5, so I will be, unless you get the close below that 62.5, and that's on I prefer a 1 hour close again, not just a little 5-minute dink close. I am watching for the potential rotation still up in here. Remember, we can still stay easily within yesterday's price action and keep a choppy corrective pattern. We start getting back above 276.64. I will target then this key area of 278.38, and then we on a continued move up be a gap fill play. The thing that takes it off the table is that close below 275.48. Now I got someone asked if there's inverse head and shoulders on the DXY. I generally do the it's better. No, there's no, at least on, not that I see, there's no inverse unless you're going down in a micro time frame. There's nothing. Nope. If Tom is right, I don't know what to do with my life. It's not that bad, Christoph. Bob should be back this afternoon as long as I have not been in touch with him yet this morning. Was dealing with too many things. I will see if he has power or not. But I would plan on it. Agreed. Stock still too expensive. Valuations high. It is a very expensive bear market. Let's see. Yeah, and that's going to get counterproductive because they had to jump in. It's going to get interesting. Also, you have more, they're going to do more relief for energy prices. It's what we're seeing even in this country. And you're seeing it especially, you're going to see it in Germany. You're going to see it, you're already seeing it in England with the fiscal policy versus the central bank policy, although central banks now had to do the QE again on the long end. So that's actually counteracting their inflation fight. And we're going to see it in this country with more stuff that's from the fiscal side of the government that's going to counteract the inflation fight and make it even harder to get it under control. So that's going to be very interesting coming up. And you are correct, Waka Waka. The 3 trillion plus market cap. It's absurd, especially for Tesla. Good morning, PMG. Glad to have you here. Glad, again, everybody new here. By the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. And we're going to go into the open. Let's just see. I know somebody were talking about a little, what was that on? What was 15-minute on the, that's off this, if you're looking at this for a sloppy double, it's off the table pretty much. I think it's off the table with that spike down. This is just overall watch for the potential reversal in here as long as that 62.5 holds on a closing basis. But we could stay in definitely choppier mode. All right. Oh, I forgot. Oh, it's back down pre-market? What? Hold on, I thought we all had to rush in to buy BBBY, which is going to have to refile. I mean, you want to see ugly? Look at the earnings. And people were actually buying this earlier pre-market. Come on. Look at that miss. Look at the revenue miss. And you'd actually think you're going to want to rush in and buy this. Anybody buying this company at this point is an absolute moron. I am sorry. You deserve to get wiped out. It's just sad. Until this crap is over, we're again not at the bottom. Just come on. Come on. There's our humor for the import. Phones are important. That's in reference to the ridiculous that the phone company is the largest in the world. That's sort of funny. Hey, Andrea, thank you. It is a casino. Yeah, Peloton too. But this is even worse than Peloton. This is even worse in my perspective. Oh, let's buy it. Horrible earnings. They say they're going to be cash flow neutral. Nah, they're going to bleed out. This holiday season is going to be an absolute disaster. All right. What are you looking for in Apple? If it takes out yesterday's lows, then I'm going to jump to the open. If we take out if we take out yesterday's lows, we still don't have the close below the 62.5. So that's what I'm watching for. 146.59. We take out yesterday's lows. You can use your short-term harmonics, your very short-term harmonics. Then I gotta look. So if we take out yesterday's lows, intraday targets and through Friday would be 143.61. And then more aggressive, 142.47. If we do close below 146.59 though, you know, back to 134.77 on a macro level. We can take a look at OXY after the close. And remember, Buffett has a very long-term plays. So Buffett's time frame versus the average trader's time frames are very different. Remember, I'm still watching the 37.15 area for the upside, and we already went through the downside, and the mouse is frozen again. All right. With that, I will talk to everyone later. Have a fantastic day. Bye for now.